Rudy Campos with the Rudy Campos home selling team at eXp Realty, and Carly Rosales with the Money Store. And Carly today is going to bring a topic about loans for investors primarily, which is called the debt service coverage ratio loan. So Carly, thank you again for having us. And what is the debt service coverage ratio loan?
The debt service coverage ratio loan, also known as the DSCR, is a loan program that is a little bit out of the box, a non-qualified mortgage that a borrower actually is not the one qualifying. The property itself, or the investment property itself with its rents, is the way we qualify. So ultimately, it's in its name. The debt or the mortgage needs to be covered by the potential rents or the current rents on that home.
Okay. So in essence, if somebody's basically getting $3,000 a month in rent, that $3,000 should cover the mortgage amount.
Correct.
Okay. So what happens in terms of the what are the criteria that people are looking for in order to qualify for this loan?
So ultimately, the basic qualifications: credit score, you can do as low as 620. Ultimately, obviously a little bit higher because it'll change the rate depending on credit score. The down payment requirement, again, depends on the investor. Again, on average, 20-25%, but can go as low as 10, again, depending on investor. And then the qualifying part, again, is based on the property. So you usually want to be at a break-even 1%, mortgage versus rents. And what we do ultimately to qualify is just an appraisal. We do an appraisal to obviously confirm the property value and also the current rent if it's tenant occupied, or if it's not occupied and it's vacant, what is the current average rents in the area for a property of that size, right? So that's what we're looking for. An underwriter is going to look for to ultimately qualify for this mortgage.
So in essence, the property that is a vacant property could be, how many units could it be? Single home, duplex, or fourplex?
Correct. Yes, it's for all residential homes, which is a property of a condo, 1 unit, 2 to 4 units. So it could be any of the above.
Okay, so in essence, if one of the units or the units are vacant, you can still get that loan as long as the property still qualifies based on the average rent and as long as it covers debt.
Correct. What we do is order a 1007, which is called a rental survey, along with the appraisal. The appraiser will go out and check the current market rents for a home of that size and location and indicate that on our 1007 report that's attached to our appraisal.
Right. So again, just to clarify, this is a loan that can cover a single family home, condominium, and up to 4 units.
Correct.
Right?
Yes.
Okay, great. So what are the documents that you would need to qualify for this loan?
That's actually the beautiful thing about this loan. We do not need a lot of your traditional documents. We will not be asking for check stubs, W-2s, or tax returns, right? So we will want to go ahead and pull your credit information because we do need a credit score, obviously for qualifying and interest rate purposes. But we do not care or see or take into consideration any of the debts that are on your credit report. We only want to look at the score. Then obviously we will request bank statements to confirm you have the funds and down payment for the upcoming purchase.
Excellent. So the documentation is a lot less than your traditional loan that most people would have to bring a lot more documents for that. And Carly, can anyone get this loan, and what are the qualifications that are required then?
Ultimately, yes, but this program is geared towards the investor, right? But it doesn't need to be your traditional investor that has a whole portfolio of investment properties already. As long as you already own at least your one primary residence for 1 year, you can utilize this program to even purchase your first investment property, so you can at least get started as an investor, right? A lot of the times it is for the borrowers who maybe have met capacity of your traditional conventional loans, and you already have 10 financed properties and need to go to the 11th and beyond, right? This is where a lot of those type of borrowers are utilizing this program to continue and build their real estate portfolio.
Great. So again, this is primarily for someone who wants to invest in a secondary property or more, and basically you can get this loan without all the traditional requirements and documents that you need. And Carly, as far as who do you think would be the best candidate for this type of loan?
A lot of times we see people who would like to purchase an investment property but maybe retired or doesn't have your traditional check stubs or W-2s, or tax returns don't look as pretty as you would like them, right? So those are the kind of borrowers that can utilize this program and take advantage of still being able to buy versus the traditional route of a conventional loan.
That's great. So this allows a lot of people, as Carly said, who are retired, maybe they're not working anymore, they don't have to worry about having to provide the income in order to qualify. So the property is the one that has to qualify more than the borrower. So that's great news.
Yes.
And also, what are the what are the lengths of the mortgage? How long does this mortgage last for?
You can do a traditional 30-year. A lot of people might think, oh, it's an out of ordinary type of loan, so I'm going to get something that's not as favorable. You still can get a traditional 30-year fix, or you can get a shorter term fix. That's up to the investor and client's choice. That's where we as the lender obviously give you those options.
So you can get a 15-year loan, 20-year loan with this program?
The more traditional is a 30 or a, let's say, 5 or 7 or 10-year fixed arm.
Okay, great. And any other things that you think people might want to know about this program? What are the benefits of doing this loan versus a different type of loan?
One thing I would mention is that a lot of people might have a negative or pros or cons of this program because of a prepayment penalty or a high interest rate, or you can pay a lot of money, right? That's not exactly the case. You've got to keep in mind every person's loan scenario is different. If that person maybe did pay a higher rate or points, what was their credit score? What was their down payment? Everyone's scenario is a little bit different, but that's where it's always good to make a phone call to see what your scenario, your down payment, your credit score can give you in regards to an interest rate, and or you don't have to do prepayment penalty. You have that option. If you think you're going to go ahead and have this for long term, maybe it is best to have one to get a better interest rate. Again, those are scenarios and options that we can go through with you to see if it one qualifies and or is what you're looking for.
So let's look at the worst case scenario, Carly. In case somebody does have the prepayment penalty, what does that mean exactly for someone?
A prepayment penalty is defined as a term, maybe 1, 3, or 5 years, for instance, that you are not to refinance or pay off or sell that loan, right? But if you do before that 1, 3, or 5 year term is up, there is a penalty that is accrued. For instance, 3 or 6 months traditionally of interest that has to be paid if you refinance or sell the loan prior to that term of 1, 3, or 5 years.
So in essence, if somebody wants to refinance, let's say the rates came down quite a bit, it's still worth paying that prepayment penalty because you're only paying the interest for the loan 3 to 6 months. It still would be worth it because it's much better rate. If you get a better rate, it's going to pay off itself anyways.
Correct, and that's where it's worth a phone call to ask and inquire and see what the difference of payment and rates versus the penalty might be, and then we can make that decision.
Excellent. So are there any other questions that people might ask or that you want to tell people about this program?
I think more than anything, if you are looking to invest, it just really depends on the property, and it's worth a phone call just to ask, here's the property, here's my down payment, here's the monthly rents that it's currently at or what it could rent for depending on the area and location, right? And we can take a look at numbers. It doesn't hurt to ask, and it's always more information the better.
Excellent. So again, thank you, Carly, for giving us more tips on the type of financing available for someone who wants to invest in real estate. And also just to let you know, if you're thinking of buying a home, if you're thinking of selling a property, give me a call, Rudy Campos, 805-479-2992. And Carly, your phone number, best number to get a hold of you.
Best phone number is my cell phone at 805-302-8224.
And again, thank you for watching this video. If you like this video, please click like on it. Subscribe to my channel, YouTube channel, Rudy Campos Realtor. and also share this information with friends and family who might be interested in investing in real estate, and perhaps they thought they couldn't, now they can. Have a great day, and thank you again.
Thank you.